Hey guys, it's Nick, and in this video, I want to take a look at the Robinhood S1 filing for their IPO. I'm going to look at their numbers in terms of revenue, profit, number of accounts, and how much they make from payment for order flow. And also, I'm going to compare their numbers to Charles Schwab so you can see just how crazy their numbers really are. It's pretty surprising when you compare the two. And if you stay to the end, you'll find out who got a search warrant for Vlad Tenet's phone and why. So let's get started. So for the full year of 2020, Robinhood had $958 million in revenue. $720 million of that was from payment for order flow. And they actually had some net income of $7 million on that. However, in the first month of 2021, they had $522 million in revenue, but they had a loss of $1.4 billion. Now, that huge loss was because of the way they have to account for the convertible notes and warrant liability that they had when they had to raise a whole bunch of capital to meet the increased margin demands during the whole Gamestop meme thing going on. So looking here, here's their revenue, $522 million. Here is the loss that they have to attribute to these convertible notes and warrants, $1.492 billion. And so the total loss is $1.44 billion. So if you take away the revenue minus their operating expenses, you see that they actually would have made about $60 million before this $1.5 billion loss here. So this is a one-time thing. And hopefully it's not something that's going to happen in the future as well. Now, Meritech Capital has a really detailed breakdown of this whole S1 with a lot of good graphs, so I'm going to use some of their graphs. This is a graph of the percentage of their revenues that come from payment for order flow and who is paying them. And so you see in 2020, 75% of their revenue came from payment for order flow. In the first quarter of 2021, it's up to 81%, with Citadel Securities making up 22% of that total. And so looking at how they get their revenue over time, you'll see that transaction-based revenue, meaning trading revenue, started at 60% in March 2019, and now in March 2021, it's up to 80%. So they're making the majority of their money from the trading, not the net interest revenues like most other brokerages are making. And of that transaction-based revenue, 47% of it is from options, 31% from equities, and 20% from cryptocurrencies. So 17% of their total revenue in the first quarter was from cryptocurrency trading, and 34% of that was just from Dogecoin. So if Dogecoin kind of fizzles out, a lot of that crypto revenue will probably fizzle out with that as well. So that's a potential risk. And here's a look at their assets under custody, meaning the total value of all customers' accounts. And in the first quarter, it's way up to $80 billion from $19 billion in the same quarter a year earlier. So huge growth. And so here they show the growth in customer accounts. 2019 was 5.1 million, 2020 was 12.5 million, and the first quarter of 2021 is up to 18 million. So here's a look at their average revenue per user. And in the first quarter, it was as high as $137. Remember that number because I'm going to compare it to what Schwab's average revenue per user is. Okay, so let's compare Schwab and Robinhood. Schwab has 32 million accounts. Robinhood has 18 million accounts. Now, while Schwab has less than twice as many accounts as Robinhood, they have $7 trillion in customer assets, while Robinhood only has $80 billion in customer assets. So when you take the total customer assets and divide it by the total customer accounts, you get the average account size, and Schwab's average account size is $218,000 per customer, whereas Robinhood's is only $4,500 per customer. So Schwab's is about 50 times bigger. And so now let's compare the first quarter revenue. Schwab had $4.7 billion, whereas Robinhood had $522 million. So Schwab has about 9 times more revenue than Robinhood. So now here is the most shocking chart out of all of them. And you may say, well, it doesn't look that shocking. It looks pretty much bland and the same. And that's the point. Robinhood's average revenue per user is $137 for the quarter, and Schwab's is $146. So almost identical. And yet Schwab makes this $146 on somebody with an account size of $218,000, while Robinhood makes their $137 on somebody with an account size of only $4,500 on average. So that is crazy. How do they do that? So to put that into perspective, Robinhood is extracting about 3% on that $4,500 account, whereas Schwab is only extracting 0.07%, or about 40 times less than Robinhood does on their accounts. Another positive for wanting to buy this stock is looking at this chart, the percentages of their expenses as a percentage of revenue. And looking at this gray line here, this is their marketing expense. And you see from March 2019, it's been as high as 49%, 39, 57, 55. But look at over here. Now, more recently, it's dropped down to between 10 and 20% of their total revenue. And so a lot of that marketing expense is their Robinhood referral program, where they give people free stocks for signing up and all of that. If they eventually pare that down or cut that down a bit, all of that advertising that they're not spending is going to drop to the bottom line. So just looking at their other expenses over the years, you see that they have been going lower and lower. So that is beneficial for their earnings. So their technology and development went from 43% down to 22%. Their general and administrative went from as high as 49% down to 26%. So Meritech has this chart of their possible valuation based on their next 12 months revenue and the multiple that you would assign to it of their revenue for the fintech peer group. So anywhere from 10 times sales to 22 times sales, and different growth rates of revenue, somewhere at least in the range of 34 billion or so for Robinhood. So Robinhood has a lot going for it in its IPO and has only a few drawbacks. One of it is the Robinhood threat of a retail snub from Reddit, which I think is kind of overblown because you look at their revenue numbers and their account numbers and they're growing like crazy. So although some Redditors may hate them, the majority of people are not closing accounts and taking their money elsewhere. And to buy themselves some goodwill with their customers, Robinhood is going to reserve 20 to 35% of its IPO for their retail customers. Now, if you're cynical, you may think they are doing this so that they can dump stock on the first day, because that's how this IPO is set up, that according to Bloomberg, employees and directors will be able to sell a portion of their holdings as soon as the first day of trading. So yes, I'm sure they want a whole bunch of retail investors interested in this thing. They even said in the S1 that there is a risk that they become a meme stock. That's kind of like humble bragging. They hope that happens to get a lot of interest in the stock, especially if a lot of employees and directors are going to be selling on that first day. They want as big a pop as possible. So one of the other risks mentioned in the S1 is that the U.S. Attorney's Office executed a search warrant for Vlad Tenev's cell phone. And this is in relation to when they temporarily restricted trading during the Gamestop frenzy. And so as a result of that, the company admitted that these numerous litigation battles are expensive and time-consuming and could damage its reputation and financials. So unless the SEC does something drastic like make payment for order flow illegal, I doubt it will have a material effect on Robinhood's IPO, and I expect that it's going to go off pretty well, and Robinhood is going to keep growing for the foreseeable future. And here Warren Buffett read the S1 and had some things to say about it. He said, "I'm concerned about how they handle the source of income when they say they don't charge the customer anything. It'll just be interesting to watch how they describe it." And Warren Buffett described Robinhood in May as a very significant part of the casino group. I don't know if that's an insult because casinos make a lot of money, so that may make people want to buy this IPO even more. So guys, that's my look at the Robinhood S1 filing for their IPO. If you like this video, hit the thumbs up and I'll see you in the next one. Thanks for watching, guys.